All right, good afternoon, everyone. So happy to see you. You're welcome to Accounting Made Simple by Zcan. I want to believe that my microphone is working. Because the last time I was viewing and I didn't know that my microphone wasn't working. By the time I realized we're gone very far in the class. So I want to welcome you to today's class. So happy to have you here. Being in class makes me so happy. It's not just about tutoring, it's about the fact that I'm alive. Oh, this my table is strong. The fact that I'm alive and I have health. Sometimes in life we wait until everything is perfect to enjoy life, and that shouldn't be the case. Wherever you find yourself in, try to make yourself happy. Do the things that make you happy and makes you feel joyful, and that way you're adding more life to yourself and giving yourself more strength and ginger. And so for me, as simple as tutoring, it gives me joy. I'm grateful to God. Sometimes people say, "Oh, why do you take pictures of yourself?" I do that just to glorify God, to thank God for life, because it's not by power, it's not by mind, it's by His Spirit. Let me just check if my video is being recorded so that what happened the previous time would not happen again. I want to assume that it is recording fine and good. Okay, so let's continue. All right, so welcome to today's class. Hmm. Sometimes when you prepare your trial balance and everything has balance, the total credit equals the total debits, like what you have on the left hand side of a trial balance. Even though we don't have a trial balance, I'm going to draw that for us. So let me draw it so that we can understand what I'm trying to say. So let's say you've drawn your trial balance. Account name. If my ink is not working, give me a second to please get a better ink. Sorry about that. Sometimes these things happen. Oh God, they do happen. So you prepare your trial balance. All my inks. Don't do this to me. What is the meaning of this? What is the meaning of this? They're flowing. So you have our account name. You have our debit. You have our credit. These are trial balance. Let's say you prepare your trial balance. Let's just use this two. Let's say you have 100,000 naira here. You have 100,000 naira here. So at the end of the day, you have 100 on both sides. This is 100,000 and this is 100,000. So when you see that your accounts, both the debit side and the credit side, has the same figure, you say, yes, hey, my account has balance, so I've posted everything correctly, I'm a few ways. But sometimes that might not be true. Even though your trial balance has balance, that is, you can see that the debit side equals the credit side, they are equal. It might not totally mean that there are no errors. And that brings us to what we're talking about today. Errors that don't affect our trial balance. Now, previously, I was talking about errors affecting our trial balance. Today, we're talking about errors. I need to put more into this here. So I did that. Errors that don't affect trial balance. So, there are times you have posted, and yet there are errors in your ledger accounts. And because there are errors in your ledger account, they affect the errors here. But Because you can see that both sides are balanced, you would assume that your trial balance is perfect, and it's not the case. So we're talking about that in today's class. But before I go on, I'd like to introduce myself. Hi, good to see you. My name is Judo Zingazika. You're welcome to Accounting Made Easy by Zikan. Yes. On this YouTube channel, we tutor accounting students and those that have accounting as one of their core subjects to write in their WAEC or your NECO or ICANN exams. They have financial accounting, and that course seems to be giving you some kind of trouble, or you're an MBA student and then financial accounting is one of your core subjects and you're not getting everything you're being taught by your tutor. So that is my core specialty. I make accounting very, very practical, easy, and I want to assure you that by the time you're done watching today's video, you would understand this topic, and that will convince you that this is the best YouTube accounting video tutorial that makes accounting very easy. And so I want to encourage you, after you watch this video, I believe you'll be convinced that this is the best tutor that makes accounting very simplified. That would encourage you to watch my other videos so that you can flow with the class and my future classes. And that would encourage you to subscribe so that you will know, because you have tasted and you have seen that this teacher, she's not a lack. She can teach accounting very well. All right, let me not talk too much about myself. Let's jump right into today's class. So today we're talking about errors that do not affect the trial balance. So, just like I said earlier on, this balance, this trial balance, as you can see, the debit side and the credit side have 100,000 naira each. And one would assume that by seeing this, that my accounts, all my ledger accounts are okay. There are no errors, but there could still be errors. And those are the kind of errors we talk about today in today's class. So I'm going to paint a very typical scenario for us. So let me just give me a second. Yeah. So number one error that could occur, or one thing that could happen in our trial balance that would make us notice that yes, that even though my debit side and my credit side are balanced, there are still errors. Are we together? Let me give you a typical example. So let's say, for instance, there was sale of goods. Yeah. Sale of goods worth 50,000 naira. Now, because this transaction occurred and you're a very busy accountant, you forgot to record this transaction. It occurred, but you omitted it totally. You forgot to record it. So there's no record of debit entry anywhere, there's no record of credit entry anywhere. Now, because this transaction is totally omitted, it's not going to affect our trial balance. You will still have 100. These are the transactions that occurred earlier on, and this is what you have. But now you have a new transaction that occurred, and you, as the accountant, because you're hurrying up of one reason or the other, you forgot. It's not intentional. Anybody can forget. And then you forgot to record this transaction. Now, because you forgot to record this transaction, I will still come in my trial balance and say, yes, I have 100 as sales, 100 as cash, because I forgot totally that there was a sale of what? 50,000 naira. And so this is one error that would occur, and then you will not post it, and yet your trial balance will balance, as you can see. And so this is called error of what? Omission. You omitted it, you forgot it totally. Are we together? So there is no record of this anywhere. You didn't open ledger account, you didn't add this to your ledger account, you didn't say, okay, sales account 50,000 naira, and then another cash account 50,000 naira. There is no record of it anywhere. You didn't record it, you didn't do this, you didn't record it here. and then record the corresponding one here. You did not write it anywhere. You omitted it. Are we together? Now this is called error of what? Omission. Error of omission. So if you omit a transaction and you omit to record the ledger entries, they will not be here. And they will not affect this because both sides have 100, 100. So you will say, my account is okay, it's balanced. See? So what does it teaches us? It teaches you that as an accountant, should be very, very, very what? Careful. Even after you've done your trial balances and it seems that everything is correct, go and check the individual questions you're being asked and see if there was anyone you forgot to post into their individual ledger account. Are we together? All right. Now, another error that could occur and will not affect our trial balance is this sort of error. Let me quickly clean this off our board. The second error is what? Error of what? Commission. Error of commission. When I say commission, I don't mean Minister of Commission or Commissioner of Health. I mean that you have a transaction that occurred, okay? And then you posted it into the wrong class. Let me tell you what I mean. So let's say we are told that Mr. Ade is a debtor. One of our debtor, Mr. Ade, purchased goods, my ink, my Biro ink, purchased goods worth 5,000 naira from my shop. So he came to my shop and I sold goods to him. He purchased goods from me worth 5,000 naira. And then he paid cash. So Mr. Day came, purchased goods worth 5,000 naira from me. And what does that mean? It means that I sold goods to Mr. Day worth 5,000 naira. So this could also be said as, this could also mean sales of goods worth 5,000 naira. I sold goods to Mr. Ade. And he paid cash. Now, let's assume when I was recording this transaction in my ledger account, instead of recognizing that it was Mr. Ade that came and purchased goods from me and he paid me 5,000 naira, I mistakenly wrote Mr. Taiwo because I have several customers. Taiwo, Kainde, Bola, Tunji. And because of that error, instead of recording 5,000 naira to Mr. Ade's name as the person that paid me, I would write Mr. Taiwo. So you can see they're all customers. Yes, but I recorded it under Mr. Taiwo instead of under what? Mr. Ade. And so this is called error of commission. So it means that what I have in my book, I will have what? Cash accounts. This is debit. I received money, 5,000 naira. And I have sales accounts. And the person that paid, instead of writing Mr. Taiwo, Mr. Ade, I wrote Mr. Taiwo. So I will now have 5,000 naira. So you can see, instead of accrediting this money that was paid to Mr. Taiwo as a debtor who maybe was owing me before, I recorded it as what? Mr. Taiwo instead of what? Mr. Ade. Mr. Ade is the person that actually came and purchased goods and paid 5,000 naira for the goods that he bought. But instead of writing Mr. Ade, I'm writing what? Mr. Taiwo. But because they are all sales, It will still be 5,000 naira as my sales. 5,000 naira cash. Even though it's two different persons, I've mistakenly made an error. Instead of saying Mr. Ade, I wrote Mr. Taiwo. And most times in business, you can have someone that is owing you money. You know, Mr. Ade could also be your customer. Mr. Ade is owing you lots of money, and this is just one of the monies he has paid you. But instead of recognizing it as Mr. Ade, you record it under Mr. Taiwo as sales. So because it is still debit and credit, even when at the end of the day I will come here, I will just add extra 5,000 naira to this. So this is becoming 100,000 naira. It will now increase towards 105,000 naira, and my cash will increase towards 105,000 naira. So because it's the same account, no need to write another sales, another cash. I'll just upgrade it and make this worth 105. Make this 105, and we'll make this 105 too. So at the end of the day, I will still have 105 here and have 105 here. So this is what error of what? Commission. Alright. Give me a second. Let me add more ink to my markers. Hope you're having fun as I'm having fun. Let me leave this to sit for a while here. Yeah. Wow. See how we can make the most of this. So, alright, let's give this a while for this to sit properly. I'll continue. Okay. Now another error that could occur beside these two kinds of errors is your error of what? Principle. Say that with me. Error of what? Principle. That's another type of error that could occur. Yeah. Error of principle. Not principal. Principle. Now let me explain this error, what it looks like. Now what this error looks like is, let's say, for instance, you purchased furniture for your business. Furniture worth 200,000 naira. You bought new chairs. Now, instead of writing this as furniture 200,000 naira, you recorded it as what? Office expense. Can you imagine? Office expense. That is the wrong classification, because this is not an office expense. This is an asset. Read my, or rather watch my videos on classification. You will know what are assets, liabilities, expenses. That would help you classify your expenditures in your business into the right category. Are we together? So furniture is an asset, and the reason is why it's an asset is because it has a lifespan of more than 1 year, and you have purchased it because you want to use it, not because it's your stock, or because you want to use it to enhance your ability to do your business well. That is why it is an asset. So it's a resource. It has a useful lifespan of more than 1 year, and it's purchased because it's going to be used for other things to make the business better, do better. So office expenses are things like transport, utility bill, light bill. Those ones are like recurring expenses. Expenses you incur just for a particular period of time. Well, they occur within a year, within 12 months. Are we together? Those ones are office expenses. But things like furniture, you buy computer, you buy fan, all those things will last more than a year for your office. So those things are not office expense. That is not the correct classification. It's an asset and it's under what furniture. So let's assume you purchase the furniture worth 200,000 naira. And then instead of writing it in your books of accounts, instead of opening a ledger account and calling it furniture, you went and posted it under what your office expense. You see, because it's an office expense, because you rather you classified it as an office expense, and expenses and assets, are both debit entries. So it will seem as if you have done the right thing. Because if you come and say office expense, which is an expense, you say office expense, 200,000 naira debit. And then you say cash account, 200,000 naira credit. You see, because it's still debit, the way an asset will be an expense. Debit and expenses are classified under the debit side because you have recorded it on the debit side, which is the right thing to do in terms of office expenses per se. It will seem as if the transaction was posted correctly, but it's wrong because your furniture will be missing. So instead of me having furniture account here as 200,000 naira and then my cash account reducing by 200,000 naira because I've paid some money, are we together? I will have what office expense. So what I'll be seeing here was office expense instead of what furniture. And because it's debit, I will say it's correct. Do you understand? Meanwhile, it's wrong. Are we together? So this is another error that could occur, and then it will not affect the trial balance because you can have both, you still have debit and credit entries. Okay, error of principle. All right, are we together? So let me just reflect what it will look like in our book, and we still see that we have the same amount here and here. So with this, I'll come here. I'll now have office expense account. Right? I have 200,000 naira, and then I have a corresponding credit entry of what 200,000 naira. So this is going to reduce. So let's net that off properly. Let me come here and do the proper thing. So I have my cash account. So I have balance BD. Right, yes, balance BD. Yes. 200, no, 105,000. Let's see if these other barrels are okay now so that we can flow very well. Ah, all right. So now I will now have office expense here, 200,000 naira as what is being paid. So because the debit side is more, this will look more like a bank draft. But I don't want it to be like a bank draft. So let us record another transaction that is going to increase our cash. So let's assume sales. Let's assume we had more sales, all right, so that our cash amount can increase. Let's assume we had a sales. Let's assume we're making an assumption. So we had a sales. We had a sales of what 500,000 naira, and cash was paid. So we sold goods worth 500,000, and cash was paid. So for this transaction, I'll have my sales account on the credit side, 500,000, and then I'll have my cash account 500,000. So with this inflow now, let's put that here so that we can be able to cover up this cost. I don't want it to be a bank overdraft. So let's say with this 500 plus this 105 additional, okay, let me do it here. So sales account, let me put it in our ledger account. This is my buyers. They are wonderful. And oh, it's dripping. So we now have sales here, 500. Okay. So with that, we have 605 now. So with this, our debit side is more. We can now cover for that, right? So let's balance this account. So you're going to have now 505, no, it's 605 actually. So we'll have what? 605 here. 605,000. Are we together? And so our balance CD here, subtract this from this, that will give us 195, no, 395, 395,000. So you now have what? 505. This is 5. 9 plus 0 is 9. It's still wrong. This is 605. Something is missing. A difference of 10,000. This is actually 405. 405 is the correct thing. So we have 405. So with that, we now have what? 605. So we now have a balance carried down of 405,000. Hope you can see that properly. 405. Okay. So we now have 405. So now that we've had extra sales of 500, our sales will also increase. That will give us what? 605. So let me write that so that we can reflect these differences. So it means that now let's have new figures here reflecting what has happened. I want us to have more space actually. Let me see how I can shift this a little bit. Let's not forget our figures. Yep. So we have don't baptize me with ink. So we have our sales accounts. We had 105 before, right? Plus 500. That'll give us what? 605. So our sales, debit and credit, be what? 605. Are we together? And then we have our cash account, the new balance, 405. So we now have our cash account, 405. And then we have office expense, 200,000. So you can see that with this, let me clean this properly. With this, we still have 605 here, and this will give us 605,000. So we can see that both sides have what? Balance. Let me write this properly so that you can see clearly. Let me have a line demarcating this. 605. Alrighty. So we can see now that at the end of the day, both sides have balanced, but this should not be office accounts. It's supposed to be furniture. So this kind of error, you can see both sides still balanced. But is it the right classification? No. Because instead of having furniture, we have office expense. So this ledger account for office expense is what? Wrong. Because what should be there should be what's your furniture account. But you can see that even though there's an error in your posting in your ledger, it's not affecting your trial balance. What you have on the debit side and the credit side is still the same thing. So this does not reflect that here there's an error in your ledger account, except you are careful to see, supposed to be furniture, I'm supposed to record, not my office expense. Hope you're having value for your time. If you are say yeah, yeah. All right, if you're having value and you've learned something, do the good things for your baby girl now. And like, share, subscribe, share, all those good stuff to encourage to move this mission to the permanent site. You know what I'm saying? All right, let's continue our class. Now, another error that would affect our trial balance, or rather, will not affect our trial balance, is error of what? Complete reversal. Error of what? Complete reversal. So let's clean this properly so that we can have space for our class, or rather space for other examples. Yep. Error of complete reversal. You show that I'm teaching you gently. Too well. So that everything will be entering your brain. See, I love you. So another error we have is what? Error of complete reversal. Now, just like the name states, error of complete reversal. I know you're very familiar with they reverse my account, they reverse my alerts. Most times people are wrongly debited and then the reversal is being done. The same thing. What this means in this instance is that instead of recording the transaction maybe on the debit side, you recorded it on the credit side. And then instead of recording it on the credit side for the second leg, you recorded it on the debit side. Let me show. Okay, so see you in my next video where I'll be sharing the remaining 3 errors. Bye. Thanks so much for watching. Love you.